investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, this is a one-year daily candle chart of the Russell 2000 index, ticker symbol RUT. And as I do each and every week, I've left my lines on the chart from last week's forecast so you can see how the price action worked out. And as I zoom in here, you'll see the market did not go down as we forecasted last week, and instead it went up. And it went up pretty dramatically. Now, what is the market telling us right now with this red candle? Notice the end of this line is my price target. That is very close to the support level right here. And as I erase all the lines that I have on the chart right now, I'm going to draw a horizontal line from that low and maintain that as my short-term price target, because that red candle right up at the top is telling us that the sellers are moving into the market. That's signal number one. Signal number two, you can see that the stochastics oscillator is rolling over. It's hinging to the downside. We have a lower high on that stochastic, so that's a negative divergence. And we also have a lower high on the CCI with a hinge dramatically lower today. There's a gap below the market right here. 80% of the time gaps fill, and I think that will be the case as we move into a shortened trading week next week. Today is options expiration Friday as I record this, and a lot of times the week that follows options expiration Friday, we generally see a higher level of volatility. So my forecast is going to go out 2 weeks, going to go just like that. And I think that the general markets are going to pull off, particularly the Russell 2000. So let's take a look at the spiders, SPY. We're going to see similar patterns throughout each and every one of these charts that we look at. You'll see that the CCI down here, as I magnify that for you, is starting to hinge lower. We have gaps below the market here, and I'm going to maintain this level of support as my target. As I roll this over to the right, I'm going to again make a 2-week forecast that we will most likely pull back to that point. Now let's take a look at the diamonds. We have a lot to talk about with the diamonds. First of which, I want you to notice the length at which these up legs have lasted in time. One right there. You'll notice that the distance from here to here, pretty much the same time period. You'll see this leg a little bit shorter in time, but these up legs are lasting. You can see the last one here was from October 23rd, ended right around November 19th. So that's about a month's time. And you'll notice the beginning of this up leg was December 4th. So we're overextended with regard to the length of this upward leg. I'm going to erase all of these lines, and I'm going to show you again what the forecast is going to be for next week and why I'm drawing these lines. As I zoom in, you'll see we have a very small-bodied red candle right there. That's a spinning top. We have a gap below the market right here as I magnify that with my magnifying glass. And this is the 20-period moving average. We have a wide divergence from that 20-period moving average. And the diamonds, again, is overextended as we reach into record highs. I think that a honest pullback or correction is in order, but this short-term pullback is what I'm forecasting with the end of that line ending right around 28,866 for the Dow. Remember, the diamonds is 1/100th of the Dow, so that would bring it down quite a bit right there. Again, that would be a 500-point pullback is what I'm forecasting over the next 2 weeks. Now, there's a lot going on, especially in Virginia. There's a lot going on with trade deals in China. There's a lot going on in Washington with impeachment trials and such. But yet, the market seems to just shrug this all off. And we have to be really careful when this is all happening, because it only takes one news bit to really spook the investor community to take profits. And I'm not saying we're going to move into a major sell-off, but as I back up here and even move into a monthly candle chart of the diamonds going back 20 years, you can see that we have 1, 2, 3, 4, 5 green candles in a row. That's 5 months in a row where we've set record highs. And look at the volume. The volume is dropping here. That's telling us that the buy side is starting to weaken. Now, even if we go higher next week, and the forecasts that I'm putting out are incorrect, at least the charts are telling us to protect profits and to minimize risk on the downside. If you're daring enough to take any new positions at these highs, be very, very careful. Make sure you keep your stops in place so that you don't lose a whole lot when the markets finally do correct. Now let's take a look at the Qs. That's ticker symbol QQQ. That's the NASDAQ market. Again, same story over and over again. We have a small spinning top up here on the highs. The moving average divergence is quite wide. I'm going to forecast 2 weeks out, pretty close to what our end target was back here. You can see that we have a higher volume here, but that spinning top and dojis also are usually found at pivot points. The stochastics right there is showing a super high overbought condition, while the CCI is showing a negative divergence. Again, what does that mean? It means we're seeing a lower high on the CCI as we're seeing a higher high in the price action. Let's take a look at the VIX. The volatility index is holding support right here. I'm going to keep this forecast in place. I'm just going to move that on over to the right and keep that at the same target level. I'm going to go out 2 weeks on this one as well. These are known as hammer patterns. That's when you have a long shadow underneath a small body candle. The stochastics is moving higher. The CCI is oversold and moving higher. And I think that would be a reasonable price target for the VIX, ending right around 1429. So if you're trading the VIX, that's a price target you want to keep in mind and make sure that you're covering your downside in the event the long positions don't work out for you. So that's our forecast. We are having an open house on Monday the 20th. If you are interested in subscribing to that or enrolling in that, register by clicking on the register now link right there. That will bring you to the registration page. We're on Monday, January 20th from 8 to 9 p.m. We're going to have an action-packed hour where we answer questions, analyze stocks, and it never fails. We have candidates that pop up every time we do this. Someone from the audience will suggest a stock that we look at, and then all of a sudden it looks like a buy or a sell signal according to the charts. And you can get a lot of good trading ideas from this 1 hour session. So hopefully I'll be seeing you there. Remember, the markets are closed on Monday, but we are still having our open house from 8 to 9. So have a good weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.